Morning, everybody. Just hope my mic's working. How are you all doing? Happy Friday. It's last day of streaming before my holiday, apart from Monday, obviously. I will be here on Monday, but last proper day. I've got a bit of a problem with my ear. Not quite sure what it is, but just have to put up with that for today. Seems like everybody's got them on at the moment. Morning, Mumo, Yotko, Evil, Callum, Danny, JC. How are we doing? All good? So it's Friday, finally. Not a lot happening in the markets this morning. As you can see, very, very dead. No ADR hits, so very quiet this morning. And news-wise today, there's not a massive amount apart from CAD retail coming up. So not quite sure what the movement's going to be today. Yeah, it's a bit of a, I don't know, it seems like an infection caused by a piece of metal moving through the air very quick. But anyway. Quick recovery. There you go. Recovered. Sorry, everybody's doing it. I just thought it was funny. Right. So this morning we've got retail sales for the pound. 1.2% drop. That's massive. I said yesterday, wasn't expecting it to be that big. We were forecasting a 3.5% drop, which is huge. A lot bigger than normal retail drop. We actually got a 1.2 instead of a 0.6. So that's 0.8 bigger. Over 4% drop. 4%. Huge. So you would expect a massive miss like that to have a big impact on the pound. But so far this morning, very quiet. We have had a drop for the last hour since the news has come out. So it is dropping. This is obviously helping the pullback get underway. So if we break yesterday's low on these pound pairs today, I suspect we've got the start of a multi-day move to the downside. Born in Virginia, isn't it? So we're looking to undo a percentage of this move, basically. So I'm holding on to all my pound shorts at the moment, pound CAD and pound New Zealand. I've taken an aggressive drawdown control position on pound New Zealand this morning. We've got a beautiful double top there this morning on that one. New Zealand dollar seems to be rallying again this morning, and pound US coming down as well. So we're starting to unwind all these up legs, obviously, as we should be, because this really, based on what we've got inflation-wise with a pound, shouldn't really be happening. So I suspect the banks will start to pile into that pound. But again, we're just waiting for Bailey to confirm some downward momentum. New Zealand dollar, as you can see, having a little bit of a rally. It's not very big, but it's enough, coupled with the pound, for example, with pound New Zealand to sort of double the speed of that. So morning, Neo. I think I said Ismet already. So that's the news this morning. We've had that 1.2% drop. We've got retail sales for the Canadian dollar at 130 this afternoon. That is also forecast to be a fairly big drop. Not anywhere near as big as the pounds, but it is down. So if we get that again today, retail coming down, again, it just cements that need to drop interest rates. If it's starting to affect the economy, getting those interest rates down makes everybody richer, which basically helps people spend money, which grows the economy, grows your GDP, makes everything happy. So again, if we get negative numbers there, as we've had from the pound today, yeah, interest rates down, bearish currency. So well, that's coming out at 1:30 this afternoon. Then we got Waller speaking at 3:40. We had Daly speaking overnight last night. Not an awful lot came out of that, but that's the other news today at 3:40 this afternoon. But wouldn't expect much really out of any of the FOMC members, basically, because we know it's all CPI driven at the moment. So rest of the overnight news, not a lot. Biden's got COVID. And Biden has also now begun to accept that he may not be able to win in November, and he may be looking to stand down. So with regards to politics and currency, a big shock in political circles can have a big impact on movement of FX as people pull their money out of that currency because they're worried about instability in the country, which brings instability to the economy, which brings instability to currencies. So we need to watch what's happening with Biden, because if he does step down, they're going to have to find someone pretty damn quick to step in. And what we will probably find is that we get safe haven runs into the Swiss franc and into the yen while people are digesting what the possible outcome economically will be with that. I bet most in here didn't get the ear thing. Yeah. If you haven't been watching the news, you've no idea why I did that this morning. But go and watch the news. Go and watch the Trump rally. You'll see. Ridiculous. Anyway. That's how crazy they are. But anyway. Japanese CPI came out at 2.6. CPI is dropping, which would indicate we can drop our interest rates in Japan after just having put them up for the first time in 2 decades. But anyway, it doesn't really affect it. Inflation is not a driving factor in what they're doing with interest rates in Japan at the moment. They're just struggling to do anything with it. Apart from that, there wasn't a lot of other overnight news. Today, bits and pieces out of the Bank of Japan. Suzuki came out and condemned what one of the Japanese diplomats said about currency movement, but not really particularly worried about that. And there's your retail sales this morning. We've had Vilroy talking this morning as well, but nothing particularly exciting come out about that yet. Still talking. No, it probably looks like it's finished, actually. So that's your overnight news, and that's obviously what we've got forecast today. The yens, if anybody is interested, this is a very, very, very good level on the yen where we are here. Yeah. So this is where we were buying up, trying to get back into this intervention. We failed a second move, intervention, big, strong bank order, whatever you want to call it. We don't know. No one will ever confirm what anything is, but second move came in, broke that low. This is the first retest of this area, and the bears are stepping in pretty hard right now. So lovely looking short opportunity on that yen. If you do want to get into it, it's up to you. I'm not trading it, but if you do want to get into it, you're gonna have to be pretty quick. Pound yen coming down hard, euro yen coming down hard. So this is another leg of strength coming back into that yen. Remember what I just said a minute ago about Biden? If Biden suddenly turns around this weekend and goes, do you know what? I'm not doing it anymore. There's going to potentially be a safe haven run. And obviously the yen will be one of those beneficiaries. So everything down against the yen. Let's just be aware of that this morning. ADR wise, obviously there's nothing. We looked at the weeklies yesterday. There's a lot of weekly opportunities yesterday, all started to play out. So these weekly hits, we've got 150s, etc. Yeah, all started reversals yesterday. So things are all starting to profit take, as you can see. So that's your 150 weekly range hit on the CAD Swiss, put it back nicely. So there's quite a few of those. And your RSIs this morning, there's a couple in there, but nothing really extended. We're just getting to the 70 levels on everything at the moment. Aussie US is extended. It does seem to be stalling out down there. We've got the pound US also stalling out at the lows. But again, we've had those weak retail numbers on the pound. So there's a good chance we'll get further downside on that, I think, today. New Zealand CAD is hit the upside, the downside as well. On the RSI, but only just scratching the surface on these, really. So they are good opportunities. These are more scalpy levels. These you want to get in and out with stops, that type of strategy, really, but not massively extended, but enough potentially for a decent pullback. Really going. This Canadian dollar weakening. Let's have a look. Yeah, this is some weakness coming into the CAD a little bit this morning. And obviously a little bit of strength in that New Zealand dollar. So New Zealand dollar CAD probably going to be the strongest winner. That's US CAD. New Zealand CAD going to be the strongest winner this morning. But we'll wait and see. Market is just about to open in 3 minutes. So the FX will get underway shortly. This is quite possibly just pull back. There we go. So morning, McKenna. Monkey, Leshy, Champagne, FTNet, how are we all doing? So looking at the indices this morning. Wow, big sell-off this morning ahead of the open. Interesting. Big sell-off coming into the open this morning. It's big pre-market range of 73 pips this morning on the DAX. Quite big. So, excuse me. The DAX at the moment, we are just at yesterday's low. So when the market opens, we may get some limit orders added in. Well, not limit orders, some buy orders added in there. Limit orders will be attempting to trigger at that level, which they seem to be at the moment. And obviously we've got this area here. So this is a double weekly low on. So there's a weekly low there. There's another weekly low here. So this is a double weekly low. So this is the 2 week, last week's low and the 2 week low that we are continuously buying up at the moment. And we're just attempting to hit that area again. DAX got through there. Market melting a little bit this morning. Nothing really said by Vilroy that I think would move that today. So yeah, we'll see where we go at the open. If you've got any FX pairs you want to look at, let me know. We will go through whatever you need to look at. Morning, Vitali. So yeah, we'll wait and see what happens at the open. We've got 40 seconds to go. I'm hoping we get a nice dump on this pound today and we start to unravel some of this leg up. We will see. Certainly been doing pretty well for the last 2 days. Pound US, we've got to get through this level here, which we are struggling at the moment. This propulsion gap, basically. So I'm looking for it to come and test somewhere down here. Got no US news today, though, unfortunately. Okay, so markets open, short DAX. And no entry on the FTSE yet. Trying to decide whether or not to play a small pullback on Euro US and Aussie US. Look at that in a sec. See what volume we got coming in at the open. Not a massive amount today. Earnings wise today, there's not a lot of earnings today. Quite quiet day today. So we've got Amex and SLB pre-market today. That's it. After market, we had Netflix yesterday. I didn't see what the Netflix results were. Asia Pacific. Asia Pacific. Netflix beats estimates. Ad-supported memberships rise 34%. So earnings up for Netflix. So might get a little bit of a bull move as from the US markets this afternoon when they open up. See what the Nasdaq did. Yeah, end of day yesterday we didn't get a lot. What time did that come out? I didn't see. $9.15. So they did release after close. So yeah, okay. Sometimes they release just before the close, which they're not really meant to do. So you get a big sort of end of day spike. Can be up to an ADR. But we didn't get that up yesterday. So yeah, no volatility at the end of the day yesterday. Okay, so the market is breaking short. Wouldn't exactly say it's particularly exciting this morning. So DAX areas to watch to the downside. I'm just going to move my target up to last week's low. So target just moving within 2 R to the downside. So watch this area here, which is last week's low. We may probably will find limit orders triggering there, which are going to buy that up. Failing that, we're looking to come down and test this area here, which is your 2-week and 3-week low, which is 125 ADR. So we have broken short. We've got support coming up not far away. Obviously, support is very obvious on the FTSE this morning. You got this area here, which is last week's low. So that's last week's low. We bought it up twice this week. So that would be a good downside target. Again, that's not very far, is it? 2R. I'm going to take it if I get it, just in case we get a bounce at that level. Failing that, you're coming down into the 2-week low, which is basically this double monthly support. So this area here at ADR today, very, very, very strong support area. So just closing half of that FTSE there, just in case. Watching that level, just watching it ticking like that down here, which means that they're trying to push through it, but there's orders, a lot of orders being executed. So you could find there's an iceberg sitting here in the form of limit orders buying this low up. If it gets through it, we should get a lovely pop straight down into here. So flush to ADR today from the FTSE if it breaks that level, but it's got to break that level. Which it seems to be struggling with this morning. Come back to that in a minute. Aussie and Euro US dollar. So yeah, I mean, basically the Euro US, obviously we've, you know, the Euro is bearish at the moment. So we are kind of rounding out a little bit here, but you know, interest rates are coming down in Eurozone. US dollar, we change our mind every 5 minutes. At the moment, it looks like a September rate drop, and it looks like an August rate drop for the euro. So the euro is going to drop its rates first, then it's potentially September if everything comes out, the numbers are right, etc., etc., etc. So there's a good chance that the US dollar might not even go bearish, which means this should be coming down. So we've just broken out of that high. We're just coming up and testing these highs at the moment. So this propulsion gap here, which was this big sell-off, we've tested that twice. They've added into it 3 times now. And we've got this area here. So we're kind of testing this whole area at the moment, which could well form the top of that range. And if it does, obviously, we'd be looking to come down. We're putting in higher lows here. So that target, these propulsion gaps, assuming we put a higher low in, very much in reach. So yeah, looking good for short at the moment, but really depends on what happens with this US and the strength. Like I said, if Biden suddenly turns around this weekend and goes, you know what, I'm going to back off, let someone else take the reins, that could have a very negative impact on the US dollar. It could also have a very positive impact on the US dollar. You never know what's going to happen with it. The market might see that as a positive thing, meaning that they won't get in. Trump definitely will get in. Trump is good for the economy, which boosts the US dollar. So it could be a massive push for the US dollar. Yeah, they could pull all the money out of the US, put it into the safe havens, which is a massive dump. So it could go absolutely either way if that was to happen. It's all ifs and buts. Everything's ifs and buts, isn't it? So, and the Aussie US, Aussie's bullish at the moment. I've got one long on that from this week. We didn't really get anywhere. Targets up there at the moment. Aussie is bullish. No reason why we should drop interest rates in Australia. Inflation's too high. They've said that there's a chance that there could be another 0.25% increase, maybe if we need it type thing. So that's definitely more bullish. And as we have got at the moment, a forecast rate drop of September, that's bearish. So the bias on this is long. So just not getting anywhere at the moment. So we've got lovely double top support coming up. Propulsion, that is your support area. That's what we've tested today, and that's what we're bouncing from. So good looking long opportunity for me. Didn't quite get a second entry on that this morning, unfortunately. That would have been nice to have got down below that level, tested it, and got a second order on here. Didn't quite get far enough today. FTSE, I'm out, flat. So we've got an inside bar going on the FTSE now. So limit orders at that low that I just identified have triggered. Yeah, so this area here, they're buying up. So that would be the next batch of sellers, which is beyond ADR today. So if it breaks long, we'll be looking for a retest of these highs or that propulsion. Whether or not it can get there today, 125 ADR on a Friday, I would suspect probably not, but you never know. DAX, that break is holding short. So the DAX, we're looking for a test of last week's low. So there's your reversal, easy target, and if that fails, flush down to 150 ADR. But whether or not, again, that can make it today, we're not getting many ADR days at the moment in the indices are not happening that often. US they are more, but in the European indices they are very steady at the moment. Kind of going back to what we had where it was very slow and choppy. We've had some really good runs of breakouts this month. Slowing a little bit, but DAX not letting up. There's no reason for it to let up because there's, that's the support. There's nothing to stop it really. So should get that hit today. Inside bar. So if you want to take an inside bar break on the FTSE, you can either take a break of the inside bar or you could take a break of the outside bar. Long or short. Target about to hit on the DAX. There we go. So T1 hit, target 1 hit, banked. Job done. There we go. 2 nice clean breaks on the indices today. Have a whiz through. So just recapping this week. Obviously, we've had quite a lot of news this week, but nothing really unexpected this week. So the CAD CPI numbers came out lower than expected on Tuesday, which weakens the Canadian dollar further. So obviously the Canadian, you can see we've not had a massive real movement on the Canadian dollar. It has weakened, but not dramatically. We are expecting another interest rate drop on it. So, business as usual there. Biggest mover of the week really was retail sales on the US dollar. New Zealand CPI dropped, which means that we've got potential for inflation obviously coming down means interest rate drops, but that hasn't come down a lot, has it? We've gone from a 0.6, we're expecting a 0.5, we've got a 0.4. Fantastic. It's going in the right direction, but it's going in the right direction at a snail's pace. Target is 2%. We're at 3.3. Still absolutely miles away from target. So that is bearish still for the New Zealand dollar. Pound CPI ticked up. So again, we were expecting that. We were expecting that to hold. We should be seeing it fluctuating between the 2 to 2.2, 2.3% for the rest of the year is the forecast. Love it to go below because obviously that would completely tank it. But even so, that means there's a high probability of an interest rate drop in the pound. So that is confirmed. Even though it ticked up, it still confirms there is potential bearish movement coming on the pound when they drop interest rates. Aussie unemployment forecast, claim it was irrelevant. Euro rates, we got the 4.25 as we were expecting. Lagarde didn't come out and say anything different to normal. We're data driven. It looks like we're going to drop in August, usual stuff. So we should see slow bearish action on the euro moving forward. And that's about it really this week. So although there's a lot of high impact news, wasn't a lot of shocks. Biggest shock we've had, I think, has been this huge drop in retail sales for the pound this morning. But as you can see, market really not batting much of an eyelid at the moment. It should go bear today. I would imagine the pound will drop further today. So shorts on the pound. But, you know, not particularly exciting, is it? Morning, Chucks. Morning, Thought Feeder. Nas plummeting. Is it? Yeah, well, they're all doing the same thing today. Pre-market, there's this is basically a sector purchase coming in by the looks of things. So when you see this happening across US indices and European indices, it usually means there's a stock sector purchase or sell going on, because you'll find in the Nasdaq, the DAX, and the FTSE there will be aerospace, for example. So if somebody is selling the aerospace sector, you will get a drop in all indices at the same time because they sell all stocks in the same sector, which is why you see confluence with the indices. So that's probably what that was. Or it can also be indicative of a large FX purchase, but normally it's stock-based. So it doesn't necessarily mean anything. It's just the market doing what the market does. FTSE bought up the lows again, so we are buying this area. So be careful if you want to try and short this today. Don't forget indices go up, and manufactured to go up. You should always have a slight bullish stance with indices, but certainly buying up the lows at the moment. Look, so it was the right call to take those small TPs this morning. So potentially plenty of upside today. ADRs. So 125 ADR is your nearest propulsion gap to the upside. 75 ADR roughly there, and 100 ADR into that big propulsion gap. But no reason why we shouldn't really just stay range bound at the moment and hold where we are. So looks good for longs today, but we'll see what happens. But I'm out. I'm done. Done for the morning. Pound coming down nicely. So profit take looks like it's well and truly underway on those pound pairs. Euro struggling a little this morning. A little bit of strength coming into the US this morning as well at the open. You think Nasdaq could spike at market open this afternoon due to Netflix? Yeah, could do. The thing with the opens and where's Nasdaq? So the thing with the opens, with post-market trading, you often find that the Globex session is where they will put those moves in. So you find during Globex, which is what we're in at the moment, you'll get a grind happening rather than a spike at the open. But sometimes it does spike at the open. Because don't forget, the US markets trade 24/7 basically on the Globex system at the Chicago Mercantile Exchange. So there's always trading going on. But it's less likely you get those spikes because you've got all this going on. And don't forget, the open really is a symbol now. The ringing the bell, the opening of the market. There's no one on the floor. You look at the Chicago Mercantile Exchange now. There's 5 or 6 people floating around. Used to be hundreds and hundreds of shouters in the pit. Doesn't happen anymore. So the open is less important. You still get a big volume coming at the opening bell because that's where the liquidity is. If you've got large executions to make, you need liquidity to get those orders in. They all need liquidity. So they all still will group at that time, that opening bell. They'll still be there when it comes on to execute those orders because they know that's where the liquidity is. But if you've got large orders to process, you can get that done in the Globex session by chopping up into very small pieces. So when you get big earnings like Netflix coming out and it's really positive, you'll tend to just find that Globex grinds until the opening bell. But if that's the Netflix order, there's no need to put it in at the opening bell. But you don't know. You just don't know. This is the thing. It's random. Everything is random in these markets. Some days it will do one thing. Other days it will do a different thing. But it depends on whether or not those earnings were big or not. Whether the market decides. You see, look at Netflix earnings. Market really not that bothered. So it doesn't look like they were really like, oh, yeah, it's good. We're expecting it to be good. Stocks work very much the same as forex, yeah? So when we get our red news on inflation and interest rates, if the banks are expecting interest rates to drop, when we get to the interest rate decision and the interest rate drops, you don't get a huge, massive spike because it's been factored in prior to the news that that's what we will get. If we get that, nothing happens. If we don't get it, that's when you get the massive spike because they're like, holy crap, we got the position wrong, guys. We're going to have to unwind it. Yeah. Same with stocks. If the market is expecting Netflix to have good earnings, they will put those orders into Netflix stock prior to the earnings coming out. If the earnings don't come out as they expect them to, you get a big spike. If they come out as they were expected, good. You won't get a big spike because the market's already bought the stock or sold the stock dependent on what it's expecting to happen. Yeah, the speculators make money by speculating on what is going to happen in the future. So those moves are already done. When you don't get the expected result, that's when you get the spike. Look at the Swiss franc. Yeah, prime example. The Swiss don't tell us they're going to change their interest rates. What do you mean you're changing your interest rates? You said you weren't going to change your interest rates. Yeah, that is an unexpected result. The market was not expecting it. Big move. If they hadn't changed their interest rates, this would have just popped along and carried on like that because the market weren't positioned for the Swiss franc to be short. So they suddenly went, sell all your Swiss, everybody. Everything rallies against the Swiss. So that's why we pay attention to news, because news is what drives everything. Yeah. And in earnings fortnight, as we're in at the moment, where all the big companies are releasing their earnings, the market has already decided what these earnings are expected to be. This is why I think we get this quiet period during earnings where it is less volatile, because if everybody releases their earnings as we're expecting, nothing's going to happen, is it? Because we're already in the right direction. If all these earnings come out as wrong, if Boeing said we're going to do fantastic and they do crap, and MasterCard said we're going to do crap and they have a whacking great quarter, you're going to get a lot of volatility because everyone's going to go, oh, we should buy some more MasterCard. We need to get out of Boeing. We're expecting them to have good results. Sell all the Boeing stock. But this is why this is the equivalent, earnings fortnight is the equivalent to our normal weekly calendar in FX. You never know when the orders are going to go in. This doesn't happen that way. What's happened with Microsoft? I have no idea. Euro index are closed. I don't know. FTSE's not. DAX is not. Don't trade stocks, so couldn't tell you what's going on with Microsoft. Morning, George. Morning, George. Next week, the CAD has an interest rate decision. So the CAD interest rate decision next week, I'll cover this on Monday more, but forecast will be difficult. It's either going to drop or it's not. We'll have to wait and see what they come out with on a forecast for the CAD. But we are starting interest rate drop. So the Canadians, and this is why I'm saying, this pound interest rate drop should have happened, I think, in July. But they were probably right not to do it by the looks of things at the moment, but should definitely be happening in August. Look at the Canadian interest rate. We're up at 5. We've dropped it to 5 by 1/4%. Inflation is still coming down at a decent rate. We're 2.7. We're 0.7 away from target. There's a big argument for them dropping this again, because since they made that interest rate drop the first time, inflation has dropped again, which means that there is more reason to drop that rate to ease the pressure on everybody. So if that happens, again, we should see the Canadian ever so slightly weaken. But we'll have to wait and see what the forecast is. It's annoying that they don't put these forecasts out earlier, but I suspect they will be forecasting 1/4% drop. So weakness in the Canadian. But we'll have to wait and see. The problem with the Canadian rate decision is that you've got the Services and Manufacturing Purchasing Manager Index coming out at the same time. So if you get a massive bull news on the US PMI figures and they drop the Canadian interest rates, the Canadian will get dragged around by the US dollar. So if you get a bear move start on that and that suddenly spikes, it cancels it out. So if they drop interest rates on the CAD next week and the Services and Manufacturing PMIs both come out negative on the US, both of those will hit the floor. But this is why you can't trade news. All these news trading courses they sell you on how to trade the news. You can't trade the news because it's basically, if I hit the buy button 5 minutes before the news, I've got as much chance as you have of making money as if you wait for the news and then hit the buy the button. I'm in it earlier. Yeah. If you straddle and try and do that, you'll get whipsawed out and spread out and in both directions and stopped out, and you lose a fortune. You can't trade it because there's too many moving parts in finance. Yeah, just because the interest rate is forecast to go down and goes down doesn't mean the Canadian can't rally. Because the banks will be going, yeah, they've dropped the interest rates, so the forecast for the next one is probably going to be a bounce and CPI is going to stabilize. Therefore, we should buy the Canadian dollar when they drop the interest rates. You don't know what the positioning is of the institutions. So, nothing is set in stone with anything. FTSE's back up inside the opening range, or actually, tell a lie, it hasn't actually ever left the opening range. That is your opening range. Well, that's the opening range. So, yeah, we're not going anywhere today. Lackluster open on the FTSE, but obviously they are buying the lows. So pullback longs would be the most probable outcome today. We've stalled on the DAX as well. So there's a break long or short. Easy break long or short on that 10-minute price action there. And if it breaks that low, you got a flush. Sound like I'm playing poker. I was short Euro US dollar from the 3rd of July. Even with manual drawdown control, I had a temporary 20% drawdown. You're over leveraged. big over leveraged. You can't get into 20% of drawdown on an individual currency, not without being massively over leveraged. From the 3rd of July, that's less than a month as well. How you look at your lot size, your initial lot size is far too big. Yeah. Can't get into 20% drawdown on something that I'm nowhere near. I haven't even hit 5% on anything this month. That's you're 4 times over leveraged. So yeah, drop 0.25% over half an ADR, 0.5% over 1 ADR. If you're using the position trader EA, we work on just to simplify things. I've changed it to work on an ADR. So your risk over 1 ADR. Yeah, if it's anything more than 0.5% over an entire average daily range of movement, and you get into a squeeze, that's going to hurt. Yeah. This is why we use ADR as risk management, because ADR is different on every instrument. And if you're risking a percentage over the average daily range of the instrument, you're always going to be fairly right. But anything more than half is aggressive. Be careful. NAS index driven almost completely by Mag 7 at the moment. Not sure Netflix will have all that much of an impact. No. Always is though. The 80% of stock movement comes from 10% of stocks. So always been the way. In fact, it used to be 80-20, the old 80-20 rule, but it doesn't work that way. It's the top 10 stocks make 80% of the movement. If a stock massive earnings increase comes out in one stock that's number 15 in the rankings, doesn't have that much impact. Microsoft cloud outage most likely drop on indices. I don't know. Microsoft cloud's got nothing to do with the indices. As far as I know. I don't know. Doesn't matter. Everybody, forget why. You don't need to know the whys. Whenever there's a big movement in anything, yeah, if something suddenly goes, we suddenly hit 150R, everyone goes, why did that happen? Does it matter? It just happened. You can't do anything about it. If you were long, well done. If you were short, unlucky. Doesn't matter why it happens. What matters is it happened, and you need to now deal with it. So go and look up what the potential reason might have been, and then go, that looks like a good short opportunity, or, oh, crap, I don't want to do anything but buy that anymore. But the movement doesn't matter. You can't do anything about the movement. It's just one of those things. Just a thing. I have to risk a lot to get a little bit of money out of the market. Thanks, Lee, but I have to risk a lot. Well, that's a surefire way of blowing your account very quickly, Church. If you carry on doing that, you will go bankrupt. But if you're using a stop loss, it's fine. But if you're not using a stop loss, so that you're in the pound US dollar, yeah? No, you say euro US dollar. Yeah, euro US dollar. Okay. So let me show you the scenario that's going to happen in the next week. Okay. This move you can see here right now on the charts, yeah, is 23% pullback. So basically what you're witnessing right now is a flag break long, because Biden is going to resign this weekend and the US dollar is going to basically explode. Yeah. So this is a flag break long. How comfortable are you now in your drawdown with your lot size? Because that is a very, very high probability. Risk is got to be kept tiny in position trading. If you're using a stop loss, it doesn't matter. Risk 10% of your account if you want with a stop. You can double your account in one trade if you get a lucky run. But if you're position trading, you have to assume the worst, right? We've just got a breakout here. If this is not a false breakout, it is a retest of support. This is a retest of support as it was there and there and potentially here. This is going long. Can you sustain another squeeze to the upside? And it's going to squeeze at least another 225 ADR, potentially up to that high. Can't use high risk in position trading. The whole bootcamp revolves around tiny, tiny, tiny risk. I tell you to use 0.01 lot size per $1,000 in your account. You're trading a 10 grand account. Maximum lot size you should have on is 0.1. Because I've lived through these squeezes. I lived through that. Aussie, New Zealand. I've literally just lived through that. Yeah, I got out there, right, after from the 28th of February until the 29th of April, an entire month of the thing squeezing against me non-stop. That cost me 9% of my account. You just told me that within 3 weeks, you've got to 20% drawdown. If this euro US dollar does that, you're dead. It happens. It did happen. It's happened many times. It's happened more times than I'd like to. You know, this year, it's happened more times than normal, hasn't it? Don't consider it, do it. Seriously. Go and back test, right? I went long here on the Aussie New Zealand. 2.5 months. 2.5 months solid in one direction. No pullback that would get you out. Yeah. I got out about here. Dead, gone. Not dead, but exited, lost. So either you have to cut it, but you shouldn't be in 20% drawdown within 2 to 3 weeks. If you hold it for a couple of months, maybe 2 to 3 weeks, you're way, way, way over leveraged. Think about 3 positions at once, squeezing, yeah, to the same level you've just experienced on the euro US dollar. That's 60% drawdown on your account. You're getting close to margin call, shutting it, losing the lot. Don't do it. It's too much. Go back and rewatch the boot camp. Haircut day for Turkey trip? Yes. Had my Sean yesterday. Done. Hate having my haircut. You realise there is only one topic of conversation in the hairdressers. Weather and holidays. That's it. Every time I get my haircut. Going anywhere? Weather's crap. That's literally the conversation I've had with my hairdresser for the last 30 years. Anyway. Excuse me. There are no AGRs or anything else. Our margin calls 80%. Margin calls are whatever your broker is margin calling you at. 50%, 100%. Depends on your leverage, doesn't it? Your margin is your margin. So your margin is determined by leverage. Some brokers will have a 50% margin call. Some will have a 100% margin call. So when you get down to 100% in your margin, it varies from broker to broker. But position trading, you don't need to worry about margin. Unless you are using a low leverage broker, which I don't, obviously. But yeah, margin. The thing with brokers is, don't forget they have 100%. You have signed a contract to give them 100% control over your money and the price that they quote you and the price that they execute your orders. The contract you've signed says, I want you to execute the price I ask for. But if you can't execute the price I ask for, execute whatever you can get me. Yeah, that is written into your contract. So if you place an order, let's look at the pound New Zealand, prime example. Yeah. I asked my broker to execute me an order somewhere up there. Price achieved that level. They closed my order for me there. Price never traded there. But I signed a contract with my broker to tell them I wanted to execute an order at a specific price. They got close to that price and said, you know what, we'll just execute it now. Because I asked them to in the contract I signed. The order that executed there and made me a loss, price pushed up and it traded at that level. It never got to that level. But they decided to execute my order there because I have signed a contract with them to say, please execute order whatever you fancy, because they make money when they execute that order. Yeah. If you are sitting 5% away from a margin call, and their system, which is shown on their system, it says if you spread price by X on X instruments, yeah, this margin call will be achieved, and you will withdraw all of the money out of their account. They will press the button to execute that margin call. Their software shows exactly what spreads will achieve what financial gain for your broker. Yeah, over leveraging just makes it easier for them to take it. Yeah, there's 2 losses there, totaling 0.75 of my account. Price has never traded at those levels. It didn't trade at those levels on that day. And it has just about, no, it hasn't even got there. Look. And today, it hasn't even got to that price today. It's double topped exactly at the 2-day high. Yeah, I have made 0.75 of loss on my account with price never getting anywhere near it. Yeah, margin calls are for your broker to take your money. The more you leverage, the more margin calls you will achieve. Overnight spreads, especially on New Zealand dollar pairs. Yeah, there is low liquidity in the New Zealand session. They know that is a real thing, but the brokers pretend it's way bigger than it really is. So if you're sitting there 10% away from your margin at 11 p.m., when it comes to 12 p.m., or rather 10 p.m. UK time, by the time it opens at 10:03, they'll have spread you out of that, and you've lost all your trades. And then everything comes down. Look, I stopped out there, and price came all the way down to there. The broker is not your friend. Your broker is there to extract money from your account, and then when you have gone, replace you with somebody else they can extract money from your account. That's their job. It's a great job, and I wish I had it, but I haven't. But it's different with every broker. You know, there is no good one. I've traded with them all. I've traded with pretty much every large broker there is on the planet. They all do it. Yeah, there is no broker better than another. You can trade with them for a little bit and they'll look amazing, but eventually they will start playing this game, because as soon as they start losing money on your account, they'll do every trick in the book to get that money back. If they switch you from an A book customer to a B book customer because you're successful, the B book customer, your spreads will widen. Yeah. If they stay on the A book, they will spread you out to close your positions because they're taking the opposite side of your position. Yeah. If they spread you out on a B book customer, you've closed the position, so you need to add another one because they charge you a commission. Their job is literally for you to literally press that button. Their job is get them to press that button as much as possible, because every time they press that button, there is a possibility we can take every penny that they go into drawdown by. But if we don't do that, we're going to get a commission, we're going to get a spread, and we're going to get a swap out of them every time they press that button. So just make them press the button. That is why those 2 orders are executed, because I had to press the button twice more. There's 2 more commissions, 2 more spreads, and 2 more swaps, because they executed those 2 orders. That's their business model. Back to life. Nothing you can do about it. If you want to trade, you have to use a broker. 2 evils, nothing you can do about it. But you've got to do everything in your power to stop that happening, and leverage and over leveraging on positions and using high risk means that those buttons get pressed more often. Your account drives down quicker, which makes you over leverage more, because the more you lose, the more you need to risk to try and get that back. And it's the ever ending spiral of blowing accounts. That's what it causes. Use tiny, 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 tiny risk. You won't have that happen. Only way to make money, small risk. And if you say, which is the usual argument, that if I don't risk big, I can't win enough to make money. If you haven't got enough money to make money with small risk, you shouldn't be trading. Because if you want to try and make 5 grand a year with 5 grand, you're not going to do it. Well, you might just about do it. But it's going to be a long, hard graft. If you want to make a decent amount of money, 10% return a month, you're going to need a 50 to 100K account to do it. It's just the way it is. Unless you over leverage. Don't get me wrong. If you over leverage and get it right, make a serious amount of money very, very quick. But it's a 50-50 shot, isn't it, at the end of the day? We're on a flush, basically. So 125 ADR is your kind of real lowest support here on the DAX. So, yeah, good chance we're going to flush to ADR today on the DAX. FTSE also breaking short again now. So retesting these lows. Is that pound rallying? Looks like the pound might be rallying. Yeah, pound's pushing. Euro's probably pushing. So when we get down to those lows, might get another attempt here. But when we get down to these lows, we'll probably see some pushback coming in. So we've got an expanding market at the moment on the DAX. So very hard conditions to trade in expanding markets because they're not ranges, they're not trends, they're just what the hell they want to be. Tricky. That's all I've got for you today. There's nothing much else to discuss today because we're waiting for 1:30 for the retail sales for the Canadian. And that's it. There's nothing else happening today. So it's literally just volume in the market. The pound obviously doesn't look like it's paying any attention to its retail numbers this morning. So we'll see. But this is just a 1 hour pullback, obviously. So we've had a reversal on the pound New Zealand at a double top. So fully expecting a pullback and then next leg down. So we'll see what happens with the pound today. But those retail numbers should be feeding into that weakness. So we'll see. If you're going to trade the US indices this afternoon, obviously just be aware of what's happened with the morning session. Seems to be quite a big Globex sell-off going on at the moment. Whether it be because Microsoft Cloud's gone down or what, I don't know. Doesn't matter, does it? But if there's a large volume gone in during Globex, there's not usually a lot left at the open. So just be aware of that today. You might get a bit of a choppy open today. But yeah, certainly a lot of volume coming through this morning. You may also get selling on the stock market, basically because they're worried about potentially Biden and what the impact of that could be as well. So, you know, markets tend to panic when stuff like that happens because they don't know what's going to happen. You know, anything can happen, can't it? So we'll see. All right, so that's all I've got for you this morning. Next week is, if you weren't in the live room yesterday or other times this week when I've mentioned it, I'm not here next week. So I will be on Monday. I'll be here on Monday morning at 8 o'clock as usual, but that's it. I'm off on holiday from Tuesday for a week. So I will post up on here what's going on, and I'll post it in Telegram and Discord. But I'll be here on Monday, but that's it for a week. So I will go through on Monday all the news. Bank of Japan is saying some stuff. Bond meeting minutes. So yeah, so I will go through obviously the forecast for next week, what's coming up with news and everything next week. But yeah, we'll see what happens. But main thing is the Bank of Canada rate next week. So we'll cover that on Monday, and we've got in its PMI week. So quite often it's a biggie. All right, so have a good weekend. I will be back on Monday morning, and yeah, then you have to fend for yourselves next week. But I'll be back the week on the Wednesday after, the week after. But as I say, I'll post everything on the website and in Telegram and Discord. So if you're not in there, go and get in there. Large-scale worldwide technical problems around the world. Yeah, same as like Microsoft. Somebody in Microsoft has dropped their coffee on the terminal. They'll fix it. But I wouldn't I wouldn't say that's what's crashing the market. Yeah, it's just it's unlikely. It's Microsoft's. Your Outlook's gone down. Oh, I've lost my emails. That doesn't really crash the market. But you never know. Could be something to do with infrastructure with the CME. I don't know. But we'll see. Anyway, it'll recover. All right, have a good one. Anything you need, let me know. Otherwise, I will be Telegram, Discord, and I will see you next week. Have a good weekend.